71%. Now that is the effective tax rate that you'll face if you earn between 100 and 125k in the UK. Now that's because you start to lose your personal allowance as you earn over 100k. So although your tax rate might be 40%, you also lose your tax-free personal allowance of 12,570. So this means that you have additional income being taxed at 20% over here as you lose your personal allowance, and then your income in general is being taxed at 40%. So that's 60% over here. And let's say that you've got a student loan. That's an additional 9% that will be taxed because you've gone to university and you've taken out a loan. And then finally, you've got an additional 2% of employee national insurance that you end up paying, which in theory is just an additional tax that you will incur. So this begs the question, is it worth earning over 100 to 125k if you're going to lose 71% of that to HMRC? But what can you do to mitigate? You can look at using pension contributions to lower your adjusted income. For example, if you earn 110k, but then you decide to put in £8,000 into your pension, that grossed up is going to be 10,000. That £10,000 reduces your taxable income to 100k. So you've then saved thousands in tax, but also your pension has been topped up too. You can also look at gift aid donations, which work in a similar way to pension contributions, or look at venture capital schemes, or even ask your employer to look at what other benefits you could receive that may not incur the same amount of tax, or non-cash benefits that may help you too. A final tip is also to look at whether you can move income from your personal name into other structures such as a limited company to ensure that you in your personal name are not going above that 100k mark and being taxed at the higher rates. Now this tax planning is a little bit more complicated and one where a tax advisor may help. So get in touch with our team if you do have any questions.